Now in this part we will understand accounting treatment of reserves and accumulated profit or losses. Now what is reserves? You must have seen on the balance sheet, in the balance sheet liabilities side, reserves and surplus, right? Or journal reserve. Now this reserve will be transferred to old partners in their old profit sharing ratio at the time of closing of the venture. Okay, that means when new partner is admitted. Fine. At the time of admission, if there is any journal reserve, reserve fund or the balance of profit and loss account appearing in the balance sheet, it must be transferred to old partners' capital account in their old profit sharing ratio. The new partner is not entitled to any share of such reserves or profit, as there are undistributed profit earned by the old partner. For this purpose, the following journal entries are recorded. First and foremost, tell me what actually from where the amount of journal reserves come. I hope you know very well, journal reserve is being created by the company from the profit which they earn, right? So what they do, they keep a part of profit as a journal reserve so that they can meet any future problem or any future consequences, right? Now that journal reserve no doubt is the right of old partners, so that because they have anyhow worked for that part of the profit, right? So that is why at the time of starting of new venture, such kind of reserve, whatever appears in balance sheet, that will be transferred to the old partner. Now what will be the journal entry for that? Journal reserve account debit, reserve fund account debit, profit and loss account. Now this only credit balance we will take. That means if profit and loss appears on the liability side, then only we will take. If we will debit it, okay, otherwise the entry will be vice versa. Okay, so here what profit and loss we are taking? Those profit and loss which appears on the liability side. Okay, so it is profit and loss account, that is credit balance, debit to old partners capital or current account. Okay, for distributing accumulated losses among old partners in old ratio, if there is any accumulated losses like debit balance of profit and loss account, just now the example which I gave you, right? Advertisement suspense account, deferred revenue expenditure, etc., it should be debited to old partners capital account in their old profit sharing ratio. Okay, now in such case what will be the entry? Opposite entry. What will be the entry? Old partners capital account to profit and loss account to advertisement suspense account to deferred revenue expenditure account. So this will be the entry. Okay, see, this is what the entry which I gave you: old partners capital account or current account to profit and loss to advertisement suspense to deferred revenue expenditure. Clear? Now for distributing surplus or specific reserve. Now what do you mean by surplus or specific reserve? See what happened, companies, they have many workers. So what they do, they used to keep some part as a reserve for workmen compensation. That means if at all anything happens to workmen and if they want to give compensation to them, they will use that account. Okay, so that kind of reserve is also a part of profit. So again it is the right of old partners to take it whenever the need arises. The firm may have created some specific reserve like workmen compensation reserve or investment fluctuation reserve to meet certain future obligations. At the time of admission of a new partner, such reserve may be in excess of actual obligation. Such excess reserve will be transferred to capital account of old partner in old ratio. The entry will be, what will be the entry for that? Workmen's compensation reserve account, investment fluctuation reserve account. Now these are the two. What is investment fluctuation? See, company invest. Okay, now investment can be subjected to market risk. Now what do you mean by market risk? That means if market is good, no doubt you will get good returns on investment, and if market is in worse condition, you will get bad returns. Fine. Now such kind of fluctuation has to be maintained. Now to maintain such kind of fluctuation, company opens a reserve, special reserve. That reserve is known as investment fluctuation reserve. Okay, so investment fluctuation reserve account debit to old partners capital or current account. Okay, so this is the entry for these are special reserves which are being created, or special surpluses which are being created by the company. Now one which you have to understand, that means entries for transferring the reserve and accumulated profit or losses must be passed even if the question is silent on this point. Suppose you have this amount in the balance sheet, silent on this point, that means they will not instruct you. They have given the amount in the balance sheet. Now what you will do with this kind of entries? Now with these kind of entries, you have to understand that you will automatically pass the entry. You will get no special instructions for that. Okay, so that is what it is mentioning. Even if the question is silent, you will pass the entries related to this. Now one more reserve you will find on the liability side of the balance sheet, that is employees provident fund or employees saving account. Okay, now appearing on the liability side of the balance sheet. Now this will not be distributed among the old partner. Why? You know very well, employees provident fund means PPF, that is provident fund which is being the share is being given by employee also in that, right? Now in such case, that amount is a outside liability. Okay, so that will not be anyhow distributed to the old partner. That will go to the employees, whosoever it is. Okay, they will get the share. So I hope I am clear with this. Now to understand this, let's understand one illustration. Ram and Mohan were partners in a firm sharing profits in the ratio of 4:1 on 1/3/2015. They admitted Sohan, a new partner, for 1/3 share in the profit of the firm. They fixed the new profit sharing ratio as 4:2:3. The profit and loss account on the date of admission showed a balance of rupees 32,000 debit. Okay, debit means which side? Debit means it is on asset side. Okay, the firm has also a reserve of 1 lakh. Sohan is to bring 60,000 as a premium for his share of goodwill. Now let's pass a journal entry. That means we have to show calculation clearly, pass necessary journal entries to record the above transactions. Okay, let's see the journal entries now. See the journal entry. First is Ram's capital account. We know very well there was a profit, debit profit, right? Now debit profit, that means what we will go for the entry, that is the loss which has occurred. So we will write Ram's capital account, Mohan's capital account to profit and loss account. Okay, now this will be distributed in the old profit sharing ratio. Accumulated loss transferred to old partners capital account on the admission of Sohan. You know very well, old matter, old ratio. Okay, old profit and loss valuation will go in old profit sharing ratio. Now what is the next? We have a reserve. Now reserve is on the liability side, that is credit. Okay, so what will be the entry? Reserve account debit to Ram's capital account to Mohan's capital account. Again this reserve will be transferred to the old partner in their old profit sharing ratio. Okay, now what is the next entry? There was a premium of goodwill which was being brought by the new partner. Now what will be the entry? Bank account debit to premium for goodwill account. Now you know very well, as soon as this entry comes, the premium for goodwill, this entry will be transferred to the capital account. Okay, for that we will find out what? Sacrificing ratio, right? Now we will always check out. Why? Because see, their new ratio is also given, old ratio is also given. So we will check out the working note. Okay, so let's check out the working note. You can check the working note, old profit sharing ratio and new profit sharing ratio. Now we will find out sacrificing or gaining ratio. That means whether it is a sacrifice or gain. Let's find out the difference, old minus new. Do remember, the system will go same, old minus new. Now when we will check out, we'll see that Ram is sacrificing and Mohan is gaining. So Ram has a sacrifice ratio, Mohan has a gain ratio. You know very well, when such situation comes, along with this premium for goodwill account, Mohan's capital, that means the partner who is gaining, his capital account will also be debited with the amount of gain which he is receiving, right? And I have even told you how to find out the gain. We will check out here also, but then understand that the amount of gain will be debited to Mohan's capital account. So what will be the entry? Premium for goodwill account, Mohan's capital account to Ram's capital account. Now this amount is particularly given straight away, 60,000 Sohan has brought. Now how to calculate Mohan's capital, this amount that I have told you. Even we'll see about this ahead. Now since Mohan is gaining by 145 in the profit, okay, that is 1/45th ratio in the profit, therefore he will also compensate. Okay, that's what I told you. He will compensate to Ram. Now how he will compensate? For 1/3 Sohan, I told you, that means for one part he is bringing how much premium for goodwill? 60,000. What is the total profit of the firm? Total profit is 3. Okay, so one part 60,000, 3 part how much it will be? Okay, so that we will find out 60,000 into 3 by 1. Okay, now once we will do that, we will find 1/4 of it, 1/45th of it, to get the real amount of share of Mohan. Fine, so this will be done. So 4,000 it will come. That is what it was been mentioned over there. Premium for goodwill account, Mohan's capital account 4,000 to Ram's capital account, that is 64,000. Okay, 60,000 is the premium for goodwill. Am I clear? Now we'll go for the next topic, that is workmen compensation reserve. Now this reserve is created out of firm's profit to pay compensation to employees at the time of admission of a partner. It is treated as follows. What is there? If there is no claim against the workmen's compensation reserve. Now what happens, sometimes there is a claim, that means you have created a compensation reserve and claim also comes ki there is a claim for any of the worker. Now if such is the situation, in such a case the entire amount of workmen compensation reserve is credited to the capital account. Now there is no claim, nobody has come to claim ki you have to pay this compensation, this much compensation or whatever. So in that case what will happen? The total reserve will be transferred to old partners capital account in their old profit sharing ratio. What will be the journal entry? Workmen's compensation reserve account debit to partners capital account. Workmen compensation reserve credited to old partners capital account in their old profit sharing ratio. Okay. Now second condition. If the claim for workmen compensation is lower than the amount of workmen compensation reserve, the amount of claim is credited to provision for workmen compensation claim account and balance is credited to the capital account of old partners in their old profit sharing ratio. Now what they say, you have created a workmen compensation, but then total claim was not there. Suppose you have created a compensation for 50,000, okay, and the claim has come for 20,000. Fine. So what is the difference? 50,000 you have total amount, 20,000 was the claim which you have to pay. The amount which is left with you is 30,000. Now what you will do with that 30,000? The 30,000 amount which is left with you, that will be transferred to, or you can say that will be distributed to old partners in their old profit sharing ratio. Now what will be the entry in that case? Workmen compensation reserve account debit. Why we are debiting? Because workmen compensation has a credit balance. If it has a credit balance, to cancel it we will debit it. So workmen compensation reserve account debit. Now there was a claim for it. Now when there is a claim, then you will write to provision for workmen compensation claim account. So this is the provision, that means this is the amount which has been gone for as a claim, 20,000. Now rest of the amount will be transferred to partners capital account, that is 30,000, in their old profit sharing ratio. Okay. Now next situation, that means if the claim is equals to workmen's compensation reserve, entire amount of workmen compensation reserve is transferred to provision for compensation claim account. That means now if I have created a reserve of 50,000, the claim is for 50,000 total amount. So what I will do, I will totally transfer the amount to provision for workmen compensation claim account. No amount will go to old partners, fine, because nothing is left, so no amount is transferred to old partners capital account. Now next condition, suppose there is a claim, but then claim is more than the reserve. Suppose my reserve is 50,000, but the claim is for 60,000. Now what is the excess amount? 10,000. Now how I will pass such kind of entry? Now entire amount of workmen compensation reserve along with the excess claim is credited to provision for workmen compensation claim account. Fine. Now in that case, total amount will be created to transferred to provision for workmen compensation claim, that means 60,000 total amount. Okay. The amount of excess claim is debited to revaluation account. Now how much is the excess? 10,000, right? Because 50,000 reserve though we already have, but 10,000 was the excess amount. So whatever will be the excess amount, or you can say whatever will be the difference, that will be debited to revaluation account. Okay, because the loss must be borne by all the old partner in their old profit sharing ratio. So 10,000 is the loss actually. So it will be borne by the old partners in their old profit sharing ratio. So whenever such situation arises, you will pass two entries. What is the first entry? Workmen compensation reserve account debit, revaluation account debit to provision for workmen compensation claim account. So 50,000 is the reserve which we already have, 10,000 is the excess amount, and 60,000 is the total amount. Fine. Now we will transfer this revaluation to old partners capital account. How we will transfer? Let's check out. Now see the entry, that is what I said. This revaluation, the amount will be transferred to partners capital account debit to revaluation account. Fine. Why? Because the loss has been transferred to old partners. Check out one small illustration related to this. See, A, B, C are partners sharing profit and losses in the ratio of 2:2:1. They admitted D for 1/4 share with effect from 1st April 2017 and extract of their balance sheet as at 31st March 2017 as follows. Okay. Now let's see the cases. First case is what? If there is no information, that means the claim is there, workmen compensation is 80,000 now, but there is no information, that means no claim. Fine. Second case, if the claim for workmen compensation is estimated 50,000, that means 80,000 we have, now we have to pay only 50,000. Now third case, if a claim for workmen compensation is estimated at 80,000, that means 80 and 80 equal up. Fourth case, now more than 80,000. Okay, now let's check out the journal entry one by one. Now first case, workmen compensation reserve account to all the old partners, we will distribute this 80,000 in their old profit sharing ratio. This is the first case. Now second case, workmen compensation reserve to provision for workmen compensation claim account, that means the amount which was claimed was 50,000, so we will transfer to that, to all the partners capital account in their old profit sharing ratio. That means the balance amount, 80,000 was the total claim, 80,000 was the total reserve, 50,000 was the claim, 30,000 amount will be transferred to the old partner. Okay. Now third case, workmen compensation reserve to provision for workmen compensation. That means the total amount will be transferred to the claim. Okay. Now fourth case. In this case we have loss, excess amount. So that means workmen compensation reserve, revaluation account, both the account will be debited to provision for workmen compensation claim account, 80, 20 and 1 lakh. Now this 20,000 will be transferred to the old partners. That means the entry will be old partners capital account debit to revaluation account. Why? Because the losses are transferred to old partners. Am I clear? So that will be the complete journal entry.